They don't want to sell it, go back into dollars, into the system. That's why there is no bull market like a metals bull market, meaning the secondary market dries up. And when the new stuff is gone and these other countries become protectionist and start to stockpile and keep their own metal and give it to their own countrymen or hold it themselves for the government because of change and instability, just like that, it's gone. And so I think the whole point is to be proactive the way that the central bankers are. And that's why they've been gobbling it up for the last several years and repatriating it, removing any and all counterparty risk. And that's a beautiful thing. Tuba Gold Eagles right here. That's $50,000, that little palm of my hand.
Right.
The only counterparty risk is someone trying to take it from me and all my guns. But the lack of counterparty risk to the system is profound in this environment. So yeah, I think the big money, who is not only the most sophisticated and wealthy, they're the most well-informed. And they've been buying it as the American public has been selling and going into the shiny objects like NVIDIA and Bitcoin and Apple. And I don't blame them. The returns have been great, but the biggest money in the world is saying, well, you guys do that and we'll do this. And that's what they're doing. It's a system that will be defined by commodities, transparency, and lack of counterparty risk, rather than by opaque debt instruments by an insolvent government or, stocks that are held that can be taken from you. If your listeners haven't read The Great Taking by David Rogers Webb, I suggest they do. Go to YouTube and watch the hour-long video and try to keep your dinner down after that. So again, counterparty risk is something that I think will take on a very ugly meaning, much more ugly than it already is right now in the future, because of how systemically tied together everything is.
In a recent compelling discussion, Andy Schectman sheds light on the unsettling potential for government confiscation and the looming risks of systemic instability in our financial markets. Schectman, a prominent voice in the financial sector, highlights how central banks worldwide are quietly stockpiling gold, signaling a significant shift, while the American public remains heavily invested in high-flying assets like NVIDIA, Bitcoin, and Apple. He warns of an impending Great Reset, driven by the global dumping of dollars and treasuries, which could trigger a dramatic spike in interest rates. This, he argues, would lead to market chaos, affecting stocks, bonds, real estate, and more. Schectman emphasizes the dire consequences of relying on opaque debt instruments and the real threat of asset confiscation by insolvent governments. He points to historical precedents and current trends to underscore the urgent need for moving towards commodities and transparency.
I would say it's already lost its hegemony. It has not lost its supremacy yet. But I think what starts out as a slow trickle turns into a much faster move. I mean, it depends to what degree we see things unfold with the BRICS. I mean, at 10 countries right now, we're a ways away. 59 countries said they want to join. I mean, as it is with the 10, the 10 already represent a bigger slice of GDP, human population, military might, 2 of the 3 largest nuclear arsenals. Add 59, you're at 69. Add the Shanghai Cooperation Organization and the Eurasian Economic Union and the Belt Road Initiative, you're talking 90% of human population, and then it's like that. So that's why I've always liked that term, logarithmic decay, little by little by little by little by little, then all at once. We're not at the all at once moment yet. And to show you how much I like it, I mean, I had a painting made, if you can see that, little by little, then all at once. I don't know if you can see that.
Which one is it? The one on the
that one. Little by little.
Yeah, I see it now. Yeah,
it's a graffiti painting.
Yeah,
but it means a lot to me. It does. That term signifies a lot to me. Sorry about that. I don't know how fast it unwinds, Danny. Slowly at first, then all at once. That's how Hemingway say he went broke. Slowly at first, and then all at once, and little by little, then all at once. I guess you could say a lot of these countries are doing this slowly right now. They are de-dollarizing and de-treasurizing. I know that's not a word, but they're selling dollars and treasuries and buying commodities. It's that a 70-year, 50-year rather, trend or system doesn't unwind overnight, to your point with the pound sterling. But, I don't think it's the death of the dollar yet. But what it is, I mean, look, all of the settlement that used to be done in dollars, or the transactions that were done in dollars, will now be done in central bank digital currencies. And all of the settlement and, reserves that used to go into treasuries will now go into gold and into commodities. So it will substantially affect the value of the dollar. The all at once moment, not sure, but I think you'll start feeling it faster than you think. And the problem is that as this accelerates and there is no demand for our treasuries, who finances our $1 trillion a month debt binge? Who finances, even if we were balanced budget right now, the 200 trillion in funded and unfunded liabilities? And so inflation has to happen. It's either the Fed, which is the most likely, or they funnel money under the table to countries like Ireland and the United Kingdom and say, here, buy our treasuries, make it look real. Because who the hell wants to hold 10-year treasuries in a country that has chosen inflation over austerity, creating $1 trillion in debt every 100 days, weaponizing the treasury market? And why would anyone hold treasuries of any duration when we've proven that can be deadly? And we let interest rates rise 500 basis points in a year after keeping them zero range bound for a decade, 15 years, and screwed everyone who held treasuries. Well, my feeling is that as the world dumps dollars and treasuries, rates go higher than anyone can think possible. That's the Great Reset. And so I don't know how fast that happens, but when treasury rates spike to the moon because no one is buying the duration treasuries, except maybe the Fed, which means monetization of the debt, or Weimar Republic, all roads lead to the same place. And if rates spike in that environment, then everything opposite it collapse: stocks, bonds, real estate, the banks, the insurance companies. That's the Great Reset. And that's the path that I've gone down for so long, thinking, well, this is how you blame a victim, or you become the victim and blame a villain for doing this to us, instead of looking closely at the fact that we've created so much debt where we have so mismanagement, the privilege of being the world reserve mismanaged. It's obscene. And, just like the public believes that the left just noticed that Biden has lost his faculties, and just like they believe that putting a sniper on a slanted roof was too dangerous from 120 yards in a direct line of sight to the president, so we'll let someone else, some kid climb up there with the AR-15, get through all of the security and somehow make it up. There's supposedly snipers and cops in the building underneath them, which is just a bunch of horseshit. Sorry for my language, but it's so aggravating to me, Danny, that they think we're that naive to believe these things. And that's the sad state of affairs. Well, maybe that's what they're banking on for incentivizing a villain to do this, or creating one rather, and incentivizing the world to coalesce this way. So how fast, I don't know, but I think it's inevitable that something along those lines happen, especially God willing, we see an election in November and we see a change of administration. But if we don't, we can see that 1/8 of an inch separates chaos and not. 1/8 of an inch separates a challenge to the system and not. If it hits him, what's Xi Jinping and Putin talking about today? And so, I don't know. I guess a lot depends on how the election plays out. And I'm not saying that Trump will fix everything if he got in, but I think we have a much better shot at mitigating, how bad things could possibly get and how fast it could accelerate. But if Trump were gone, I think it would happen a lot faster than people think. Price of gold at all-time highs. At the same time, you have positive real yield. I mean, forget about the lying CPI numbers and the lying, inflation itself is just completely a lie. Inflation's 11 or 12%. I brought my in-laws and one of my kids and my wife to dinner last night. One drink. I had one drink. There were 3 sodas, 1 drink, and 4 dinners. And 5 dinners, excuse me. It was $360. Oh, wow. It's like, there's inflation. I don't care what people say. I mean, and ironically enough, food is not in the CPI numbers. nor is housing or energy and the things that are inflating. But I don't know, man. I just think that this will spin out of control very, very quickly. And when that happens, whatever the event is that triggers it, the allocation of precious metals to the financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund is less than 0.5%. And it doesn't take very much money, really, or interest by the public to jump in and completely overnight drain the whole system. Where we have, 5% interest, 5% allocation, that's a tenfold increase in demand, and overnight everything's gone. So, I mean, the only way to really succeed in any investing is to be proactive. And I find it interesting that the most well-funded and well-informed traders in the world, the central banks, they're loading up. So we have positive real yields. We have a strong dollar. We have outflows out of the ETFs. We have tepid demand in the retail market, and yet gold's at all-time highs. I thought that logic would say that it should be going the other direction. So add in a voracious demand by the American public with all the money that they have tied up in other asset classes. When they realize, oh my God, what am I doing? I need to have some metals. There'll be none to be found. That's how fast it will happen. Even though the market's flush with product right now, I've said forever it will be defined by the inability to source product, because if things were to get that crazy, you have two mints in the United States, in North America, Canada and the US, handful of refineries. The rest of them, South Africa, Australia, Austria, the United Kingdom, and all of the refineries around the world that are not in North America. That's it. There is no bull market like a gold bull market, Danny, because every other one speaks to your desire to make money. That's greed, versus your desire to protect, which is fear. Greed and fear are the motivators, and people watching the price of metal go higher or the world gets scarier only tightens the grip on it. They don't want to sell it, go back into dollars, into the system. That's why there is no bull market like a metals bull market, meaning the secondary market dries up. And when the new stuff is gone and these other countries become protectionist and start to stockpile and keep their own metal and give it to their own countrymen or hold it themselves for the government because of change and instability, just like that, it's gone. And so I think the whole point is to be proactive the way that the central bankers are. And that's why they've been gobbling it up for the last several years and repatriating it, removing any and all counterparty risk. And that's a beautiful thing. Tube of Gold Eagles right here. That's $50,000, that little palm of my hand.
Right.
The only counterparty risk is someone trying to take it from me and all my guns. But the lack of counterparty risk to the system is profound in this environment. So yeah, I think the big money, who is not only the most sophisticated and wealthy, they're the most well-informed. And they've been buying it as the American public has been selling and going into the shiny objects like NVIDIA and Bitcoin and Apple. And I don't blame them. The returns have been great, but the biggest money in the world is saying, well, you guys do that and we'll do this. And that's what they're doing. It's a system that will be defined by commodities, transparency, and lack of counterparty risk, rather than by opaque debt instruments, by an insolvent government, or stocks that are held that can be taken from you. If your listeners haven't read The Great Taking by David Rogers Webb, I suggest they do. Go to YouTube and watch the hour-long video and try to keep your dinner down after that. So again, counterparty risk is something that I think will take on a very ugly meaning, much more ugly than it already is right now in the future, because of how systemically tied together everything is.